Alright guys, welcome back to Black Wall Street EDU. And the last video we talked about the moving average, and we talked about certain things that you want to look at before you get into a long-term stock. One of the things that we talked about was the SMAs, right? Simple moving average. Anytime the stock is above the simple moving average, you may want to consider staying in the stock. Anytime it's below, you may want to consider selling it. Okay. And typically when people trade these long-term stocks, they look at it once a month at the end of each month, so they don't really go into panic mode. They're in it for the long term. Right now we're looking at Tesla, and we're looking at the daily time frame here on Tesla. Okay, looking at the daily time frame, and I did take a peek at the weekly, but right now we're looking at the daily. So another thing that you may want to look at when you're trading long term is something called the RSI, Relative Strength Index. Okay, Relative Strength Index, what that does, it tells you if something is either oversold or overbought. Okay, anytime you see these yellow lines here, it tells you that here is at 70. Some people consider 80 to be overbought, but right here on Thinkorswim it has 70 as overbought, and it has 30 as oversold. Some people consider 20 to be oversold, but that's what we're dealing with right now. And if you wanted to make any adjustments, you can go in here, click on this little indicator here, and you can make your adjustments here at right here. So you can say, well, oversold should be at 80, and overbought should be at 20. So you can make your own adjustments. Go in there, click OK, apply, and OK. So now right here what you have is 80 is oversold, overbought, and 20 is oversold. Okay, so so that'll just make it a tighter range. Now before you get into a stock, even though it is above the moving average, you want to make sure that you're not in an overbought position. You're not in an overbought position. You want to be somewhere in between here, neither overbought nor oversold. Okay, so if you go back and see that, okay, right here you see that this stock is above the moving average, and you look at this RSI indicator at 76, just realize that the probability of that continuing up is low. It has a very low probability play, but not saying that it can't continue through this line like it did on your right hand side. It continued straight up into the overbought position with some volatility here, very strong candlestick. It still continued up. All right, so just realize that this would be ideal to buy, not here at this situation. The trend is still trending lower, but if it were to look like this location on your left hand side when it was above the moving average and you were here, that would be the perfect storm. Okay, but like I said, never buy a stock when you're in an overbought position. That's a rookie play, because it can definitely turn around on you, and the next thing you know, you're wondering why. So this thing gets anywhere up here where I draw the line, or anywhere above 80, just like I said, just be careful, because it can pull back on you like it did at this location. People started taking profits, and moved back into the neither overbought nor oversold position. Started to move up here. Perfect time. If this is a perfect position to buy, because 3/4 of the candlestick closed above the moving average, and it's in a neither overbought nor oversold position. So if you were a long-term trader, you may want to consider, you may have considered getting in at this particular point and riding Tesla up. Okay, so that's just one stock. Let's look at another one. Let's look at Lucid, and let's see, Lucid here closed above the moving average, and neither in a it's not in an overbought nor oversold position. Got in here, rode it up to profit territory here. Perfect time. I'm not sure why this is red, but at this particular area, because it's neither overbought nor oversold, and right now it's would have been a great time to not sure if it would have been a great time to buy, but it was close. All right, it was pretty close. Let's see if we can get a closer view, closer look at that. Closer look at that situation here. Hey, come on. All right. Sometimes things swim not the way you want it to. Anyway, so you guys get the gist of it. So if you're here in this location right here, you see that the candlestick closes above the moving average. You may want to consider getting in right at above the profit area. Sometimes it's close, very close. So you got to get, a tighter look at, what's going on in that particular area. But it won't allow me to do that. But yeah, so that was close. That's a low probability play, even though, we rolled it up on a very, very strong candlestick above the moving average. That may have made a big impact on your buying decision or not. But don't be scared. Just get in, take very small losses, very, very small losses, and big gains. Manage the trade. Manage the trade. For me, like I said, I like to look at them every day, but you don't have to. But if you're comfortable with a strong company, blue chip company, and know that, hey, we're making profits, just get in, and like I said, keep an eye on it. Pick a sector that you want to trade, and become familiar with that particular sector, and familiar with using, pretty proficient with using moving averages, RSIs, and different things like that. Okay, just want to show you guys RSIs and how I use it. So I'm not sure how everybody else uses it, but I've been doing this for 21 years. But a few other things I'm going to show you guys in the next video that I think you're going to be excited about. Once again, thanks for joining Black Wall Street EDU. Until next time, stay tuned.